Hello, and welcome to Data, Refining This New Oil and Car Business. This Automotive News Power Training webinar is brought to you by Stockwave. Thank you for joining us. I'm Jackie Charnaga, F&I reporter at Automotive News. Before I introduce our speaker today, a few navigation tips. First, we encourage you to ask questions at any time. Just type them into the Q&A box on the left side of the webinar window and then hit Submit. I will steer your questions to our speaker towards the end of this session. Also, to enlarge the slides, just grab the frame with your mouse and pull it larger. To download the slides, click on the Handouts icon at the bottom of your console. Today's speaker is Patrick Janes. Patrick is the Business Development Director for Stockwave, vAuto's wholesale sourcing solution. He brings more than 27 years of experience and automotive industry knowledge to Team vAuto. And now, I'll turn it over to Patrick to get us started.
Hey, good afternoon, good morning to everybody. Let's go for the first slide under Big Data. Does that apply to your dealership? So, folks, today, what I want to talk to you a little bit about is kind of getting back to the basics, the blocking and tackling. Now, I know that doesn't make a whole lot of sense that I just threw the word big data up there, because when people think of big data, and I've been kind of watching this in the industry, other industries as well, how does back to the basics apply to big data? Big data sounds like this new ground that we're going to embark upon. And I want to share a little bit of what I think is going on in the world of data as it applies to the automotive industry. But I also want to spend a little time with some blocking and tackling. If I had a nickel for every time I used or heard that line in my career, we got to get back to the basics, we got to do the blocking and tackling, I'd be doing this webinar from some exotic remote location. But spoiler alert, I'm in my home office here in the cornfields of northern Illinois. But today we are going to spend some time on the basics, but I also want to talk about this big data concept and whether I think it really is in play in the industry, at least for the average car dealership. We know that there are disruptors out there and some other folks that might be using some big data, and how do we compete with that? And I want to get to that point throughout this discussion today. So why, do I want to go back to those, to really back to the basics? When I transitioned out of the dealership, I invested about 9 years of my career. About a year after that, later, I had one huge regret. And I thought I was pretty technologically savvy as car folks go. Then I joined a software company, and I got that consulting job that I always thought I would finish my career in. And after about 10 weeks of boot camp style training on the software, my regret was clear. I ignored most of the basic information that I know this day. If I would have known it now, known it then, I would have been so much more effective. And that's why I want to share some of the things that I think I missed along the way and make sure that you've got a good grasp on that. So now I spend a better part of my time shamefully telling dealers about the things that I missed. I know this because as a consultant, I worked with guys that were crushing it every day. And what were they doing? They were just blocking and tackling. They were evaluating and managing every VIN in their inventory and every VIN they acquired like they were children, all right? They wanted to add some value while they were under their watch, and then they cut them loose. So one step at a time, we should be on the data is the new oil slide. Is that right, Libby? You there? Thank you. One step at a time, oil companies ruled the globe, an immense, untapped, valuable asset of the 18th century. Oil was the world's most valuable resource. It was the key functionality of everything from government to local companies. Without it, progress would halt and economies would shrink. In other words, in the great American engineer and statistician, professor and father of the modern quality management, William Edwards Deming, he said, "In God we trust, all others must bring data." So therefore, data to the digital economy as oil is to the industrial economy. So when I see some of my old pals on LinkedIn, they did not go into the car business, I really get jealous because they're working for some huge tech company, one called Mist I was reading about today, and looked how big data and AI, artificial intelligence companies correlate massive data with performance and scale and harness the same principles in the Mist cloud. And that sounds like really exciting stuff. So big data is really for IT folks, and it lives in some cloud that only really smart people can access. But then I read this story on the next slide about Netflix. And Netflix was using big data to predict what users want. They were producing television shows to kind of help their portfolio gain traction, and they were using big data to make a $3.8 million decision. Sounds pretty simple, right? They use market data that common people to predict what type of entertainment they could produce in-house to supplement their offering. So they gathered on their own, I might add, a bunch of big data to make a $3.8 million decision. And I thought, wait a minute. The average inventory of a new car dealership, according to NADA, is between new and used inventory is over $5 million. And we want to turn our used car inventory at least once a month and our new car inventory at least half that many times. So Netflix wants to attract customers to watch their $3.8 million episodes so they can make another and another and another. And we want to attract customers to our $5 million inventory so we can buy more and more and more. So I got to thinking, you know what, maybe big data is for the average car dealership, and we just got to figure out where it is and where it lives. So how do we take big data and make it actionable for the average dealership? So I started studying the business case of the early American entrepreneur and philosopher, Jed Clampett. Come listen to a story about a man named Jed, a poor mountaineer, barely kept his family fed. And then one day he was shooting at some food, and up from the ground came a bubbling crude. All right? Here's the critical mistake that I saw Jed made in his business. He sold the rights to that oil, and he never refined it into a product. So who's to say that today's Exxon and Mobil oil couldn't have been Jed and Jethro oil, right? So what I do know is that the disruptors, as we affectionately call them in the industry, that those disruptors are actually refining this big data that's out there to acquire cars every day for markets all over the country. I hear it at every conference that I attend. I don't understand why they keep their hand up and they're paying $1,000 over MMR like it's no big deal. Well, I'm telling you folks, it's the data. And knowledge is power, as they say. So before we go all in after today and change our old ways, is it really going to be worth it? Let's look at the used vehicle sales activity that's going on so far this year. Now, the headlines say that used vehicles are going to plateau this year. But like politics, don't just read the headlines. All right? Here is our economist predictions for 2019 and 2020, and look specifically at the retail forecast. Retail here is defined as vehicles sold by dealerships, not including private party sales. So with a $39 million plus industry and growth for dealer sales trending in the right direction, as you'll see those retail sales growing next year and the year beyond, I say we go out and get our unfair share of this. It looks pretty, the upside looks pretty strong regardless of any plateau going on. It's not going to go backwards anytime soon, certainly not for the dealerships. So with a strong market comes rising prices. So let's look at the wholesale prices in June for major market segments here in this chart. The average used car is selling for over $20,000 now, with the average new vehicle selling for over $37,000. The affordability gap is very clear. Interesting, SUVs and CUVs are on fire on the new side. So on this slide here, an interesting part of the graph that talks about compact cars, notice the wholesale prices in June for compact cars, barely inflated at all relative to the rest of the segments. And I want to come back to that a little bit later because I think there's an opportunity in the used car market around compact cars. It really kind of ties into the affordability opportunity as well. So I promised I'd go back to the basics. We're going to go to the next slide here on the cost to market. And I promised that I would get to the basics. So here we go. So if you think you got this, stay with me. There are some basic definitions that I didn't truly understand when I was in retail, and this is one of them that I didn't pay attention enough to. Now I've made, a living over the past 4 years showing dealers what their true pain points are in their operation. And in my opinion, operationally, this is the most important metric in today's market to measure the health of your used vehicle inventory. So first of all, cost to market, it's a vehicle's cost as a percent of the average retail market. Okay, makes sense. Now, in vAuto, we actually measure the average price of a car as 100%. So if you're pricing your cars at 103%, you're 3% over market. If you're pricing them at 97% of the market, you're at 3% below the market. So really what I want to know about my cost is where am I relative to where the average car is kind of transacting. Now, if it's low, then it indicates that you might be missing opportunities. And so we would dig deeply into your look-to-book, your trade capture, and understand how that process is working for you. If it's high, it indicates you may be owning your cars for too much, okay? Some of that might be you're heavily reliant on auction purchases, and we just saw the rising prices of auction cars. So therefore, your cost to market is going to be higher on an auction car. We all know that game today. But, we also may have some issues where we're just putting too much into trade. So there's a lot of opportunities to look, but it's one of the, in my opinion, the most important metric in today's market to measure the health of your real used car inventory. So in the next slide, we actually bring this home and show how this pertains to margin compression. Now that you understand that cost of market, look at this chart, and this is one that Dale Pollack put together, and these are all users within vAuto. So obviously, we have over 11,000 subscribers, so there's a lot of big data in here. In the first 0 to 15 days, cars were coming in back in 2017, if you'll notice, at about 83% cost of market. By day 16, they owned them for about 84%. Okay, so if you read Dale Pollack's books, that is the target. That's a healthy inventory. If you can own all your cars for about 84%, if I can sell them at 100% price to market, I get a nice 15, 16% margin, right? Now, you'll see that it takes all the way till day 60 before that depreciation really starts to take effect, and we own them for 90% of the market. Now, if you live in Atlanta or Chicago, you know that you got to retail cars at around 96 or 97%, maybe 95%, just to get some action on that car with a highly competitive market. So we're down to single-digit margins at that point. But look what has happened fast forward to 2019. All right, back to day 16 to 30. We own those cars already at 89%. By day 30, we own them for 90%. This is the margin compression that we're battling, folks. And this is where we really have to be sharp in our acquisitions and how we manage our inventory. And in the words of Dale Pollack recently, he says, today, dealers have to make hard decisions faster. That's just all there is to it. Can't hang on to those cars. So the next pie chart here shows the sources of used vehicles retailed by new vehicle dealerships. I recently received this updated pie chart from NADA. It is for all of 2018. I compared it to 2017, and that the slice of the pie for auction purchase has actually grown. My prediction for 2019 is that it's actually going to get even bigger. New vehicle sales are softening a little bit, right? You're probably seeing less trades coming in. We've got record off-lease inventory coming through the auction. Those cars are attractive. We're buying those because of all the lease activity happening 3 years ago. And the question becomes, so how do I buy smarter if I've got to rely more on auctions, and that becomes a bigger piece of my pie, 26+%. Bottom line is you got to leverage this big data we're talking about. You got to refine it into metrics and make smarter decisions on every VIN you evaluate. And we'll look at a couple cars like that. Next, let's talk about big data. we have a slide here that shows all the big data that is available, what I consider in our market today. Here are some of the key things that I think come into play when you're trying to assemble this information, but here's the key. I have yet to see a dealer running a job opening in automotive news for a data scientist position. I don't see any of those, right? So we need to know where this information lives and find it in a usable, actionable format. That's the key here. We can have lots of big data, but if we can't grab it, apply it, and make quick decisions where time is a premium in our business, then we're going to be in big trouble really being able to become smarter and compete with any of the disruptors that are out there. So the first area, the first point there is your sales history. Now, I'm a bit partial, but I like the way that this sales history is organized to show your key dealer sales data. I like putting opportunity into price buckets across the top, and you customize those price buckets. You know where your sales are happening and where the most sensitive price buckets. You price your cars every day, and you know where those key price bands are and whether you're getting enough inventory to supply those price bands or whether you're not. Secondly, down the left-hand side, I like to look at vehicle segments because I can align my business as a dealer with the way the industry tends to look at sales. So I just threw some slides up there earlier and some charts that said, we're always paying attention to where the wholesale market is on compact cars and intermediate SUVs. So as I see industry trends that are happening and I get information through webinars like these and information I read online in industry news, I can start to bring that back to my inventory so that I can see where my opportunity are. So where my opportunity lives. How many times have you heard if I could have more $13,000 used cars, I could kill it, right? Well, those are tough cars to find in the wholesale market, but make sure you're not just using your gut. Use the data to see if that's really where your sales history is. Now, you'll notice this arrow there on this particular slide where I can dive into the cars I have active. Those are my inventory, and then I can go in and look at my sales. And the next slide allows me to dive into those sales within that price band, within that segment, and take a moment and say, am I doing well there? Do I have the right type of inventory? How do I do that? I click on those sales and I find out, did I make any money on those cars? Did they age on me? All right, did they become part of my margin compression problem because I really didn't do well with the inventory that was there? That's critical as you start to put your plan going forward on how you're going to supplement your inventory, use big data to do a better job of acquisition. So next, once I've kind of got an idea of how my sales rate's going and how I need to plan, I'm going to get back to the basics once again. If you've heard me speak before, you know that the biggest risk I see to used car operations is buying large chunks of inventory because I'm in a panic and the boss said go buy some cars. So how do we make the best gross profit deals in a dealership? Right? From the emotional purchaser. Our sales process is built around making them love the car, love the salesperson, and build value. We don't want to get on that price conversation the entire transaction. We pound this into our sellers' heads every day. Is there nothing better than a customer that shows up in an Uber and they just totaled their car? They have burned the ships, as they used to say in those historical battles, and they got to buy a car? It's a beautiful thing, right? Some of our best grosses. So why do we let ourselves, as auction purchasers, get into that position? Service and recon is always way too slow, right? You can never satisfied with that process. Yet we have months worth of cars land within days. So this is a worksheet that has been so popular that we now have it on our website. And it's a simple approach to get your leadership team together, get them on the same page, get a projection of what you need, and then put yourself in a position to buy cars daily with the time to use the proper metrics and evaluate all those VINs to make smarter decisions. All right, so another part of big data, local market sales. What's going on in your market on this next slide here? Now, for this presentation, this data is all available based on how far you want to push your market out. Okay, you can go out 100 miles, 75 miles, 150 miles. That is all, you have the ability to manipulate that within the system. For this presentation, I thought it'd be really cool if I went into this dealer's account and I pushed it all the way out to the entire country, just to see what's going on by price band and by segment. Kind of interesting, kind of aligns with some of those graphs I showed earlier about what was going on in the compact segment and all that. So if you look at the orange line on this chart, those are the market sales for all used vehicle transactions. And in this example, that's for the entire country. So you would probably dial this back to 75 or 100 miles. But I want to say for the entire country, are there any learnings here? The fastest moving price point nationally, $13,000 to $17,000. Okay, maybe not a surprise. It used to be a little lower than that, but hey, we're now into that affordability, and we're seeing price points moved up with the average used car over 20 grand now. We're going to take a deep dive into market-based supply here in a minute, but just to know, as we look at that segment, there's a 57 market-based supply for that $13,000 to $17,000 price band nationally. The average vehicle is about 75 to 80 market-based supply, so that's a pretty fast-moving price band, one that should be very attractive in most all markets. And another thought is, I had a dealer, if you're getting those type of trades in, maybe even those $10,000 to $13,000 trades, I think most of you have figured this out, but I have worked with dealers in the past. They used to wholesale a lot of that merchandise, mainly because they were higher demographic, they were more upscale dealers, and they didn't want to mess with those kinds of vehicles. It might be a little bit of project invested into them, a little more service work. I got to tell you, the happiest dealer I ever worked with, we tried and we held on to those cars, and sometimes we did a very clear, transparent, as-is type of setup on those vehicles, and they couldn't believe how many people came into their dealership with their children who needed that $10,000 to $15,000 car or less, and actually gobbled those cars up right and left. I asked them, hey, did you take it on the chin? Did you have any that got returned? And, after a year of doing that, he said, I can count on one hand. And when they came back and there was a problem, we took care of it because they were good customers, and they were customers that were buying, our other vehicles within the franchise. So again, hopefully everybody's learned that lesson, that these lower price point cars and the size of these segments are gold in many cases. The next slide, local market sales by segment. Okay, again, national look in this case. I told I'd bring you back to the compact car segment. 53 market day supply nationally. And by my math, if you look here, the compact and intermediate car share of the used market is just as strong as the compact and intermediate SUV market. So again, when you say all this stuff gravitating on the new side to SUVs, the car market has not caught up yet. There's still, because of affordability, there's still a lot of activity and could be some real opportunity for you in those segments. And you can look at this in your own individual market, and I think will prove true. The next slide is by model year, okay? So I said a lot of these off-lease, we had a lot of off-lease inventory is plentiful. And sales of 2016 models nationally, 21%, by far the highest. 21% of used vehicle sales nationally. Now, you have to be aware of this in your local market, but if you're buying off a list of late model rental cars, make sure you understand what the saturation point is for that strategy. If we look all the way over to the right and we see 2018s and 2019, so many times I see dealers jumping into that 2019 game right away and buying, late model rental cars. And there's a strategy for that. I've seen successful ones, but I will tell you, when you hit that saturation point, it gets pretty ugly pretty quick. So I say do an analysis of the past 6 months' sales and check the age and profits of those units. Always be monitoring them. My experience is when a dealer overdials that mix of those late model rental units that they're buying off that list, it's not helping the margin compression challenge that the industry is facing. So everything in moderation, as they say. All right, so we've got this big data. We talked about a little bit that we can access, and it's out there in the marketplace. So now, next slide, we're going to refine this data into some metrics. This is how we take oil to end products, okay? This is what I was proposing Jed Clampett to do, to where he would have made a lot more money than he did after he moved over off the Beverly Hills. But now, what can we do in our business is we can take big data, we can add technology, and we can actually refine that into all these metrics on that laundry list on the right-hand side. We need to get metrics that help us make better decisions on a VIN-by-VIN basis. The big takeaway is more is better. There are a laundry list of data points. Let's use them all. We're going to use them all to make fewer mistakes. So next, more is better, right? Just to prove my point, the next slide shows what are the metrics necessary to make a good stock investment. Look at all those things. PE ratios, return on equity, free cash flow, price to book. There's a ton of stuff that investors use to make decisions. But the most important thing is every investor article I've ever read said one thing. Bad decisions are a result of only looking at a single metric to make a decision. And I truly believe that's the problem we run into when we're trying to acquire inventory. Burying our head in the sand and saying, hey, MMR means everything to me, or one particular guidebook means everything, that's the slippery slope that we get into, and therefore we find ourselves not buying anything, right? So I think it's important that we take these metrics and we look at them collectively to make better decisions. So I hear this all the time in the next slide, which is these people are paying more than MMR for cars, right? I mentioned it earlier, talking about these conferences. So that is the single metric that most people hang their hat on, all right? That's what I want to get off of today, and I want to look at all the other things that make up a good decision. That's what the disruptors do, and you can do it too. So next, let's talk about guidebooks and auction data. There's nothing wrong with guidebooks, okay? But I will tell you that I've got a couple of examples up here that are important to give you an idea of when we look at all these data points together, when we look at MMR wholesale average, we look at Black Book, when we look at NADA retail, when we look at KBB typical listing price, when we look at what the live market data says through the R book on what that vehicle is listed online for, you're going to find that some guidebooks love certain vehicles and some hate certain vehicles. The key is looking at all that data together. So I had a Chevy Equinox up here. It had a buy it now price of $18,900. MMR was $17,150. All right. Low market day supply, NADA and KBB show a real nice upside. If I look at all those together and I do a good appraisal, an instant appraisal on that vehicle with my reconditioning and my auction prices, suddenly I'm coming up with a price that's about $1,000 off of over MMR to pay for that vehicle. Guess what? I'm one of those disruptors in the lane, paying way too much for cars, right? But it pencils because I looked at all those other variables. I looked at that low market day supply, and I said, you know what? I think that vehicle's got an opportunity. There's a Subaru Forester that I had up here as an example. Buy it now, 13.6. The Carfax status has a recall on it. If I'm a Subaru dealer, hey, just picked up a little extra gross profit on that one as well, right? And when I did my math and I looked at that Subaru and I looked at the market day supply and I looked at what the upside potential was that car, I was actually willing to pay over that buy it now. for that vehicle. But it's all the collective metrics together. If I stayed polarized on one metric, I would never buy that car. So let's just take a break and talk deeply about market day supply for just a minute in this next slide. And market day supply, as the definition goes, you've heard it all before, but I'll be honest with you, even today when I talk to dealers and I ask them, so how do you define market day supply? I get about 5, 10 different answers. So bear with me here. Market day supply is the current available market supply. Okay, it's the average daily retail sale rate over the past 45 days. So the key is, and I'm going to show you a little calculator that I use as a cheat sheet, which really kind of drives this home, but a high market day supply means I've got to price that car aggressively to the market. I'm going to trade high market day supply cars. It's just going to happen. And those vehicles, because I've got a customer who came in with a high market day supply car to trade, and I'm going to put them in a new car, and they bought 4 cars from us, and I'm going to take their trade. The key is how you treat those vehicles with what you put in them. More importantly, once you move them into your inventory and how you price them. You got to know what you're dealing with, and you got to know what you have. A low market day supply car is where we get an opportunity to get that margin compression, a little bit of relief. Typically an opportunity to price that car a little bit over market, and typically a hot vehicle. So I want to be in tune. Again, the market day supply is around 75 or 80, but the number of cars in the market does make a difference. So let's go to this next slide and look at an example. And if you could just, I think that's a build slide. If you could make sure we just show the first one, and then we'll go to the build, that would be great. So here's the best way to represent market day supply. This calculator was created by a colleague years ago at vAuto. And you need to determine what you think your market radius is for your car before you determine how many are in your competitive set. So say you're in Chicago and you say, 25 miles is as far as you think a shopper will travel, since it can take them an hour and a half just to get that distance. But now remember, if someone is willing to drive 25 miles to your store, then while they're shopping online, are they willing to look 25 miles in another direction for cars that are online? I would say they are. So a lot of times when I look at market, when dealers are trying to dial in a marketplace, I think you have to cast a little wider net, because there are people looking at those cars up to 50 miles in this case for those vehicles. So be careful not to get your market too tight, because you might be missing some vehicles out there, and you may, in some cases, just need to get more data to have a better statistical number, to really rely on. So if I look at this first example, it's showing 54 cars in 25 miles, let's say, and 185 market day supply. I love this calculator because it tells you what it really means. That means there are only 13 buyers for those cars in the next 45 days. I got 54 cars in 45 days. The market says they're going to bring me 13 buyers. Now, in the next example, I take that same number of cars, and it's a 38 market day supply. 54 cars, 38 market day supply. What does that say? That means there are 64 buyers coming to those cars in the next 45 days. Radical difference between 38 and 185 market day supply. So it's important to know how many cars are in the market, because let's face it, if I've got 300 rental rockets and I have one of those, I could have a really low market day supply car because they're moving fast. But if I price my car at 250 out of 300, I'm still going to have a lot of challenge trying to get action on that car. So it's important to understand how market day supply works and apply it every day. All right, scarcity. The next slide. Auto Trader scarcity, and yes, you can get this metric without being an Auto Trader customer with the right technology. Wink, wink, wink. It's a simple measurement of demand and supply, somewhat like market day supply, but this metric works the opposite. A high scarcity is a very desirable vehicle. So Auto Trader is essentially looking at the market and they are determining how many vehicles are listed and how much demand that they're seeing on the AutoTrader website for that vehicle, and they're able to give us an index. So notice this Audi that's up there. I had to kick my distance out 250 miles just to find 17 of them, okay? But the scarcity index is a nice 316. My good friend Craig White, who's a used car director that I highly respect, he kind of taught me how to leverage this metric. He relies on it every day. He says that scarcity index is about 150 or higher, and you've got something to really take a look at. So keep that in mind as kind of a best practice. So this next slide is what I call the 1-2 punch. And this is combining the metrics, too, in this case. I got a really high scarcity, and I got a really low market day supply. So this is a vehicle I can make money on in the market, and this is telling me a lot about demand of that particular vehicle. So technology. No shameless plugs today, but there are plenty of places to find big data and assemble a few metrics to evaluate a car. But the more data points you can see all in one place and at one time, which, you know, your time is a premium. I get it. So time savings is critical. But when you need to pull the trigger on a vehicle purchase, at the end of the day, when you've got more data points to rely on and more things to check and apply, and once you understand how these metrics can work together, it just plain eliminates those mistakes we've all made in vehicle acquisition. And your margin of error shrinks substantially. So find the technology that can provide that glance that you can look at and be able to make better decisions and buy cars better. And ultimately, as shown in the next slide, I want you to become a disruptor, right? There are no shortcuts here, friends. Remember the case study? The consultant called that guy, the consultant for Jed's name was Kinfolk, and said, Kinfolk said, Jed, move away from there, said, California is the place you ought to be. So they loaded up the truck and moved to Beverly Hills, that is, swimming pools and movie stars. That's the easy way out, okay? My job is to make you a disruptor. And if you apply the discipline of using all this big data, refined to actionable metrics, you can get your heaping help of the car business hospitality. I guarantee you, there are guys that are doing it, and I've worked with them, and they understand how this works together. It's your turn to be a disruptor. You just got to get the metrics and the big data organized in a fashion to be able to pull this off. So once again, my final slide here. I'm not ashamed that I pirated most of the best ideas in this presentation. So feel free to implement them with no guilt attached. I've recommended them to you with no guilt of my own. So I just want to appreciate your time. I'm sorry we had a little glitch there with the slides. Hopefully we tracked well enough to be able to get the point of some of the ideas, and you were able to grab a few nuggets today. But whether you're a client of Cox Automotive or not, please feel free to reach out to me. My email is up on the screen, and quite frankly, I love to get examples. I threw a few of them up there today where you're using metrics and the metrics aren't lining up and things are all over the place and they're squirrely cars that you have to make decisions on. Grab a screenshot, email that stuff to me. I love sharing that with other dealers so that they can understand really the power of using more data points, big data, more metrics to be able to make better decisions, because there's a lot of cars that I think prove that every day when you're in there trying to make decisions. I think we'll turn it over to questions.
Right. Thank you, Patrick. All right. We're going to be looking to our audience for questions now. And I have the first question for you, Patrick. Are there any other metrics or data points that you did not cover today that dealers should use for managing their inventory?
Yeah, so I really hit on acquisition metrics, and that was really where I wanted to focus today. But when a car comes into your inventory and you start to apply pricing decisions, as a performance manager working with clients, The number one go-to metric for me was what the activity is on that vehicle. And I define activities as SRPs and BDPs, right? So how many search result pages that vehicle is getting and how many vehicle detail pages, most importantly. I think there was a study done a few years ago by CarGurus that they looked at several 100,000 VINs. And if you could get a VDP, a click-through to your car, if you could get one per day for the life of that calendar month, about 80% of those cars will sell in that month. So when you're looking at pulling that pricing lever, which is reduce the price and shorten that margin that we all hate to do, it's so important to make sure you look at what your activity is from a VDP perspective. Obviously, you can check your CRM for leads as well, but usually the leading indicator, it's kind of like that person that sat out at the desk and, counted ups every day so that we would make sure we track everybody. Most folks can't afford those anymore, but that's really what that VDP is doing for you, is letting you know how many eyeballs are on that car. And if you've got a good cadence, then it's likely you're going to get an up on that vehicle. That's a really important metric to keep an eye on, that I think when it comes to the pricing side that we need to know. Now, when I was talking about scarcity and some of those items, that kind of plays in, that activity plays in at the acquisition side. Once the car is there, are they finding my car on my website, I think is a critical metric to keep an eye on.
All right. Another question from our audience. Can you give your thought on used car packs, and can you define what pack money is for the audience?
Yeah, this is a very controversial topic when it comes to talking to dealer ownership, and I'll give you my kind of straightforward answer on it. I think I can just steal this from Dale Pollak. Packs are profit. So at the end of the day, I think as long as we know that, if we're not making buying decisions on the acquisition side because a pack is saying you're going to pay too much money for this car, then I think that's going to have an impact on your operation. I understand, and having been on the retail side, I understand the use of packs and what the philosophy is behind them. But when it comes to acquisition, in me, you can just move that pack right to the profit margin that I'm expecting to make on that car, because we know, and I educated you on the cost to market metric. We know that it's not unusual to buy a car at auction with no pack figured in for 95, 96% cost to market if it's a really attractive product and it's something that we turn very quickly and it's got a low market day supply. And if we've got to pay all that money and we won't make that decision, even though we know we're going to make $1,500 in F&I profit and the service department's going to make another $400, so that's a $1,900 of profit that we forego because we may only be able to make a $400 or $500 front end on that car. That really flies in the face of what we call the velocity principle, which is get the car in, price it right, and turn it. And the packs are profit. That's something that can be sorted through in accounting. But at the end of the day, I still have to make myself be in a position to be able to make acquisition decisions and not pass on cars because they don't look attractive based on all the expense that I'm loading into that appraisal.
Great. Okay, and another question. If you could only use one piece of data to buy the right vehicle for your inventory, what's that piece of data?
I'd probably beat this into the ground, but I'm going to say market day supply because I think that, I'm a velocity guy. I've seen velocity work very successfully in stores. And when you go in with the idea of moving cars quickly, I think it helps you also from a pricing standpoint, whether you're going to have price pressure on that car or not. So I think market day supply is probably the most critical metric. Dale Pollak just introduced, actually back in NADA, a new metric called profit time. And coincidentally, it is a combination of where you own the vehicle, what kind of activity the vehicle is getting and where what the market day supply is of the vehicle. So it's a little more sophisticated algorithm to predict how great that vehicle is going to be, and he's got a precious metal lineup, platinum, bronze, silver, to be able to categorize those vehicles. And so that one there, if I could just have that, that would be my choice. But if I don't have that combination of metrics and I could only have a single one, then I would go with market day supply.
All right. Thank you for that answer. All right. I believe that brings us to the end of our webinar. Much thanks to Patrick and today's audience for their questions. If you asked a question that we didn't get a chance to answer, Stockwave will follow up by email. If you learned something from this session, please tell your peers about it. The recording will be available in about an hour. You'll find it at autonews.com/powertraining. When the webinar ends, a survey will pop up on your screen. Your feedback helps us get better. Thanks again to Patrick and Stockwave for bringing us this presentation, and to you for joining us. On behalf of everyone at Automotive News, have a great rest of your day.